Okay, so couple of things you have to understand, and I had this conversation with a couple of people in the Discord. Now, technical indicators are great, right? You can pick anything. You can pick moving averages, supply and demand. They all work, right? If you specialize in one, just use that. But if you don't understand the structure of the market, you're not going to get away from making money because, like, look at a day like today. Supply and demand wouldn't have helped you. Let me just pull my chart real quick. Okay. All right, are you able to see the screen? Perfect.
Yep. Let's
So
make it bigger
today,
now. There you
today was a day where I'm gonna pick SPX here, where if you look at the range, this is where the market opened. We opened at 37.98, and the high of the day was 38.36, and this is literally what we did. And the reason why a lot of people lose money in this market is because you'll find a supply or support somewhere here, it breaks, you get into calls, and it's a fake out. Then you get somewhere here where if you're using support and resistance, this breaks and you get into puts and you get this immediate bounce. Then if you look at a move like this where you're like, okay, you know what? I'm going to get into calls. You get into calls, you're up 30-40%. You get one red candle, and instead of being up 30, you're now down 40-50%. And the reason for this happening is two. One is we're chopping because the market had such a big move yesterday that the market is actually absorbing that, right? RSI is cooling off. And so what you need to understand is anytime you have a trend day, and a trend day is where market just rips or goes down, the next day be careful. Understand the structure. And what you could do to understand is wait for an hour to see where the top and the bottom are forming and play around that. I don't want to use the word counter trending, but that's literally what you want to do it. Once it hits the supply, you want to start adding puts. Once it gets to demand, you want to start adding calls. So your range trading. One of the best indicators for that is Bollinger Band, which I've covered in episode 4, so you can go back. Second thing you need to understand is what's happening. Why are we going up? Why are we going down? So first thing you need to understand is charts, market are not equal to the economy. If the economy is going down, that doesn't mean the market will go down and vice versa. Market is separate. Second thing, and this question a lot of people are not clear with, can buying options or selling options move the price of the stock? A lot of people will like, no, you need to buy stocks to move stocks. The answer is no. Buying and selling options can actually impact the price of stock. And it's done through something called gamma. And I'll explain you. Let's say Mark here is a market maker. And Mark's job is to balance the house. It's kind of like he's the dealer at the house, right? His job is not to make money or do directional bets. His job is to make sure he's neutral, meaning he's always balanced at all times. Me, I'm a fund. Let's say I'm Goldman Sachs. I come in buying, let's say 24,000 puts. Now, my puts go out the money, so I'm losing value. Now, because I have a lot of puts, and the entirety of the reason why I have those puts is so I can hedge my long position. Now, what I'll do next is because my puts are going out the money, I will sell them, and I have two options. I can either roll them, meaning I can get something closer to the money, or I can buy more time. So when they start selling it, it's done into two steps. First, they sell it and then they add. The adding doesn't have to be done on the same day or even the same week. But what happens is when they start selling these puts because they're out the money, they're losing value, the market maker, meaning Mark, has to buy back stocks to balance, to stay delta, which causes a rip in the market. If the market is going down for several days or weeks, like we saw 7 weeks of straight down movement. What ends up happening is people who had these big in the money puts funds, they start taking profits. When they start taking profits, what you see on the system is they're closing it. And because they're closing it, the market starts ripping because Mark is now buying back those stocks to stay delta neutral. No matter what indicator you use, if you don't understand the structure of the market, you're gonna have issues. So you don't have to get into macro, understand bonds or anything like that, but just be patient. In the next segment, we're gonna talk about how to pick option chains, and that's also gonna be tied to the Greeks, and we'll go over that.